So the white paper for Bitcoin was released back in 2008. It was pretty much just after the financial crisis. It was released by either a person or a group known as Satoshi Nakamoto. And then it was launched in January 2019, so it was just around the financial crisis. It was a way to transact with money directly with the counterpart. So it is peer-to-peer without any intermediaries. And what we actually saw back in 2008 was that many of these financial intermediaries, many US-based banks, they went bankrupt. So it was a way where you don't have to trust an intermediary to be able to transact with another counterpart.
Yeah, so they were invented cryptocurrencies to be autonomous in some way. They had to run without a bank to make it cheaper and also to give the banks less control. So that was the origin of creating cryptocurrencies.
Yeah, exactly. And also just to be able to transact with a higher degree of trust, where you don't have to put a trust in another person, but you can instead put trust in the code itself, which is, by the way, open source.
Yeah, but it's still a long time, the development process, right? You said it launched back in 2008 with a white paper stating the rules of Bitcoin and how it works. And then first in 2017, it actually became quite popular and well known to the general public. It's a long period. What happened there?
What was really one of the other big events that was back in 2015, where the current second biggest cryptocurrency, Ethereum, launched. And it is this smart contract enabled blockchain, meaning that you can do decentralized applications, again without any intermediaries. I think they were actually really important, but it's not really something that we talk about because nothing really happened. But we saw the first exchanges where you could trade different crypto currencies, for instance Bitcoin, and then later Ethereum. So I think they are really the cornerstone in what later became the cryptocurrency market. So in my opinion, I think the trading of cryptocurrencies has become popular due to the fact that it's this new technology. So we don't know right now at least whether it will become something really big or it will never become anything. So it's something that you buy and then maybe it will be a huge thing, or otherwise it will never be anything spectacular.
Yeah, but it also really has a lot of FOMO, fear of missing out in it. Yeah. Like in the bubble in 2017, investors buying without knowing what it is. Then a couple of years later, we saw a new bubble, but that wasn't investors, but that was, I would say, bigger companies who wanted to engage with the technology, and they wanted to join these metaverses, online virtual worlds universe with cryptocurrencies, and they just wanted to get in, but they didn't really know what the opportunities were. So I really think also FOMO has driven a lot of that.
Yeah, for sure. And I also think if we compare it to, not to compare it directly with the internet, but what we also saw in the early 2000s, that investors and traders as well, they are buying in on something new and we don't know exactly how to evaluate it or say, okay, this is 2 million worth of something, because we don't know how to look at these numbers yet, because we have pretty much no track record compared to, for example, equities. And then, Anders, there was a bubble back in late 17. Yeah. What's your experience with that?
Yeah, so actually, in the end of 2017, we saw this price bubble forming in cryptocurrencies. We had a lot of investors calling Saxo about Bitcoin. They wanted to invest and get exposure to this new asset class they didn't really know about and they didn't know anything about the underlying technology, but they just wanted to buy it because of the expectations for it to go higher. And also in biology, this behavior is very unstable when something increases this fast. And this is exactly what happened. The bubble burst, this financial bubble burst in 2018. Prices went down, and a lot of the traders, they got really disappointed. And then there were a period of nothing, I would say, in crypto market. It was quite calm. But you were at a trading firm at that time, Mads. Maybe what happened there after the bubble crashed?
Yeah, I think actually, so the mainstream media pretty much stopped talking about crypto. But I think it was like the hardcore crypto advocates, they still talked about it, they still innovated. So I think what actually we saw in 18 and particular 19 was the fact that more and more developers made different decentralized applications running on cryptocurrencies. So what actually led the bull run for the past couple of years has been all these decentralized applications, which was pretty much made in a bear market.
Yeah, so what you're saying, these decentralized applications are actually something where a lot of people help running this new currency instead of just a central entity like some of the bigger social media.
Yes, exactly. So pretty much I am able then to trade directly with you, Anders, without any intermediaries. Just running on a decentralized cryptocurrency, for example, Ethereum. So in March 2020, I was at a crypto brokerage firm, and we had this COVID crash, which I think was actually, even though that the whole crypto market fell with 50%, it was pretty calm at the trading floor. I think it was mainly due to the fact that all other asset classes, they had pretty much similar crashes. So it was not something directly related to crypto itself, which is actually what we have been used to from prior crashes in crypto. Then it was solely crypto crashing.
But yeah, okay, impressive that it was so calm, because I think we saw a lot of panic in the crypto space. There were a lot of traders with very high leverage positions, and they really got hurt bad. And what also we can see in this risky asset class is that when it starts to go down, it goes down very quickly because of all of these highly leveraged traders, who are stopped out.
Yeah, sure. But I think, at least from my point of view, and if you're not that leveraged, here it was not an event only related to crypto. So we saw all other major asset classes crashing similarly, and we knew the reason for that. So it was not any unfriendly regulation or any major hacks of the crypto space itself. It was something which influenced all other asset classes as well.
But you were quite calm, and it seems like the market also was quite calm, because we came back again.
Yeah, sure.
And had another bubble-like trend in the end of 2020, driven by institutions who wanted to go into this new technology without really knowing what it was.
Yeah.
And then now you can say we are back. Bubble has burst once again, and we are back at a very calm level. Where would you say we are now within the crypto space, Mads?
So yeah, actually what you said as well, in my experience, we saw institutional adoption starting in around 2019, and then particularly in 2020 and 2021. For instance, Saxo was the first Danish-based bank to make a crypto native product in the shape of our crypto FX, and that's really what we saw in the past couple of years. So prior to that, it was really few banks who wanted to touch cryptocurrencies. It was only crypto-native firms, and that's where I think we are now. We are still, even though we are in a bear market, we are still seeing that the institutional adoption continues in one shape or another.
Yeah. And we do also have the whole green agenda on a global scale, which are putting some of the cryptos under pressure because they rely on very high energy consumption. And we also have central banks who are now a little bit afraid that this decentralized technology will take over, so they lose control. So they actually started developing their own digital currencies, which have some of the same features as the current cryptos, with being fast and also cheap to transfer, also on a global scale. So I'm also very curious to follow the development here to see how this competition goes.
Yeah, sure. But I also think, like, in relation to central bank digital currencies, they are at least some years out in the future, because they have already used, 5 years to develop them, and they are not really ready yet. Whereas cryptos, they are really ready now, and they are like this open source, fully decentralized projects.
If you want to have exposure to cryptos in Saxo, we have different options for doing that. We have the Crypto FX product, where you can trade cryptos as FX, as you usually trade FX, with applying leverage, going long and short. You have some index trackers where you can get exposure to a specific cryptocurrency, where you buy a stock usually. And then you have the last possibility is not a direct exposure, but there are a lot of companies which are in the cryptocurrency space, either miners or they are holding a lot of cryptocurrencies, and you can buy exposure to these companies if you want to have exposure to the cryptocurrency industry.
But I think in general for investors wanting to have exposure to crypto, I think one should see it as a hedge. A hedge against the future where we don't know, at least now, which role it will have in the future. So either it can be really big or maybe it will not be anything. And maybe also some in the middle of that. Yeah. So it is a hedge that investors they can buy in on, or they can maybe also just leave it if they don't want to have any exposure to that.
Because it's still very high risk, even though the markets are different now, the crypto markets than back a couple of years ago. It's still high risk, and there are a lot of clients who are losing a lot of money. So we have to be careful when trading cryptocurrencies. But as you're saying, you can see it sort of as an option. You're buying an option which can become worthless or worth many for what you actually invested.
Yeah, exactly. And it is just a highly speculative, highly leveraged market. So if there occurs a crash, then all these long positions, they will be stopped out and then it will just crash further. And that's also something that traders should be aware of, the fact that it is probably one of the most speculative markets.
Yeah. But I would say then, looking on the other hand of cryptocurrencies, it's still an interesting technology. The fact that you try to distribute the validation process when you're doing payments, and also the whole blockchain technology is still a growing technology. So that's what you're actually buying if you're buying into cryptocurrencies. It's a digital version of a currency with a lot of applications in various places and institutions. And I don't understand all of the applications for cryptos as it is now. I think you understand a little bit more of these, Mads. But there are a lot of companies looking into what they can use cryptocurrencies for, and I'm still looking forward to see this killer application for cryptocurrencies on a global scale.
Yeah, but it is for sure an exciting market. Also, just if you went back 3 years, and you said that we are here today where we are in the crypto market with more and more institutional adoption, more knowledge within what you can do with cryptocurrencies, then I don't think anybody would believe you. So it is a market which develops rather fast.